the best trades using order blocks. First, we want to see price clear a prior point of liquidity, either a prior session or a prior daily point of liquidity. So then we see price extend lower and give us a market structure shift. Price was giving us this bullish market structure, but once price breaks this low, we're now looking for a bearish trend reversal. We see price left this order block that push down lower and give us this market structure shift. Our entry at the open and your stop loss at the prior candlestick highs. You want to see price pull back and mitigate your zone to then extend lower. Nice and simple. The strategy is super simple. We see price push down lower and give us a failure swing to then extend higher and give us this change in state and delivery. All you gotta do is market execution your trade. That's your stop loss right at this candlestick low. In your first prior high gonna be your first take profit. In the second final range high is your final take profit. Stopped out. Use this simple strategy. A lot of people are not aware of the OTE, our optimal trade entry. If you grab your Fibonacci from the range low all the way to this range high right here, you see our golden zone is the 0.705 and the 0.79 OTE. You see right above this zone right here, this right here was just internal range liquidity. So all the traders that got inside of this fair value gap was just used for liquidity. The best place to place your trade is the 0.705 OTE and your stop loss right at this candlestick low. And you're going to target this prior range high up here. Nice and simple. Liquidity pool to liquidity pool. So after price give us this liquidity sweep and then extend higher and break through this prior high, this is our market structure shit. All you want to see is for price to give you a slight pullback to then extend higher to come and clear this prior liquidity point. We see price broke through this old high right. So our entry at the open and our stop loss at the candlestick low, and I'm targeting this prior high right. We just want to see price pull back and mitigate our zone to then extend higher. Nice and simple. Okay, trading. All we're looking for is a liquidity sweep of a prior session or a prior daily low or high. Then for price to displace lower and give us a market structure shift of the low that went and did the liquidity sweep. This right here gives us a new dealing range and start our smart money reversal. Our new range is from this high to this old low right here. Place your entry at the 50% of this breaker and your stop loss right at these candlestick highs and target this sell side liquidity low. To your zone, you're gonna get the best trades. We see that price gave us this sideways consolidation range crawl into this order block right here. So you could have taken this trade right at this order block because liquidity is hiding all below these old lows right here and this prior sell side low. But what if you miss this first entry? We see price push down lower and give us a breakup structure of this low and left this bearish engulfing order block. Your trade at the open and your stop loss right at the candlestick wick. And I'm gonna target this prior sell side liquidity low. Struggling with your entries. After price give us a liquidity sweep of this high, we see that price pull back and give us a failure swing of this old low to then extend higher and give us a full body breakup structure. On this new dealing range from this low to this prior high, this is a 3-minute entry zone. We see price leave this mitigation order block that's aligned with this fair value gap. Your trade goes at the mitigation block open and your stop loss right at the candlestick low. And you're either gonna target for a 1, 2, 3R or a prior pull of liquidity. These relative equal lows and mitigate this order block right here. What if you miss this first entry? All we're looking for is a change in state of delivery. We want to see price come and clear this prior swing high right here and give us a full body breakup structure. After this candlestick break, place your trade at the open and your stop loss right at the candlestick lows down here, and you're going to target the same prior highs. You just want to see price pull back and give you a wick entry to then extend higher to clear these highs right here. So if you miss this first entry, this could have been your second entry. Nice and simple. Fair value gap in the order block, you're going to get the best entries. We see price clear these relative equal lows to then extend higher and give us a market structure shift. On this new dealing range from this old low to this old high, price left this fair value gap that's near this order block. This is a high probable entry zone. Your entry at the order block open and your stop loss right at the candlestick low, and you're targeting this prior range high right here. We just want to see price pull back and fill in this fair value gap, either mitigate the open or the 50% to then extend higher. Trade the SMT. The SMT is where we have two correlated pairs, where one of the pairs give us a liquidity sweep to then extend lower and give us a breakup structure, but the opposite pair give us a failure swing to then extend lower and give us that breakup structure. As you can see right here, we're looking at NASDAQ. We see that NASDAQ rally higher and swept these old highs, but on ES, right, the opposite pair of NASDAQ, we have a failure swing. Then we see that price extend lower and give us that breakup. So all we're looking for is for price to pull back to a recent PD array. We see that price lift this inverse fair value gap, your entry at the open and your stop loss at prior old highs, and you're going to target this recent fair value gap open. Nice and simple. Create the market maker sell model. We see price pushed up higher and clear this prior high to then extend lower and give us a breakup structure right here. But we see that price left all these internal range liquidity lows. A lot of orders are hiding below all these old lows right here. We see that price left this unmitigated reversal model. This is where price push down lower and give us a fairer swing of a old low. Price usually give us a liquidity sweep, but we see price give us a fairer swing to then extend higher and give us a market structure shift. So with this new trading leg, all we want to see is for price pull back and mitigate a recent PD array. We see price left this order block that's aligned with this fair value gap. So we'll place our trade at the order block that's aligned with the fair value gap, and we're going to target this prior range high up here. Boom. Nice and simple.